Spur reported a 20.2% increase in first half diluted earnings per share to 66.49 cents. Revenue was up 16.2% to 236.2 million rand, while operating profit before finance income grew by some 20.5% to 85.1 million rand. An interim dividend of 40 cents per share was declared. Now, Spur obviously playing across a couple of franchises. We've got Spur, we've got Panarottis, and we've also got John Dory's. They've recently made that foray into Doragos, which is chicken, seafood and burgers, servicing the lower LSM. Let's focus on their current operations. Obviously, the Doragos acquisition made pretty close to the end of their reporting period. Byron, I hope you're going to be a little bit more enthusiastic about this one.
Yeah, I'll be honest, I ate my words a bit on this one. I spoke about this a while ago. Yeah. I spoke about this one a while ago, and I just said that I much prefer famous brands because their brands are more exciting, and there's not much more they can do other than make maybe some exciting acquisitions going forward. But the management have done really well in being innovative with their products and what they have to work with. You know, they've got certain loyalty schemes, and the breakfast at Spur has done fantastically, and is now responsible for 10% of around 10% of Spur's whole revenues, just the breakfast. So the management have done fantastically with what they got. I do like the sector as a whole. I think the up-and-coming middle class in South Africa are really going to grasp this concept of going out to restaurants and so on. You know, everyone enjoys it. It really is a fun concept, and I think that as more disposable income enters the South African market, the likes of a Spur are really going to do well.
You sound as though you've sampled those breakfasts, endorsing them. Looking at that loyalty program that Byron mentions, we've got some 750,000 customers on that loyalty program. It's obviously working well for them from the promotional perspective. Do you think we're going to see more and better things to come from Spur?
I think we have to. In many ways, and I don't mean this in a derogatory way, but it's very much been the kind of poor relation compared to famous brands. If you compare the Spur share price to the famous brand share price in a 10-year view, it's been one way, and it's down, and a fairly steep downwards trajectory as well. I think what we're seeing now is a reaction. They're being quite reactive. It's good what you've suggested in terms of this loyalty program, stuff like that, and I think we'll have to see an awful lot more because they've got a lot of leeway to catch up. I mean, the famous brands guy 10 years ago, they realized they had a lot more to do in terms of covering a lot of bases, and it's only very, very recently, for example, they got back into chicken, having made a couple of fairly disastrous forays into it with churches and the like. But I think these guys, you know, they're highly focused on what they do, but I think they do need to get into some other different franchises. Easier said than done. There's not an awful lot on the ground these days.
Well, looking at Spur, obviously the jewel in the crown, so to speak. What about Panarottis and John Dory's? Are you familiar with either of those concepts and how successful they are?
I know the pizza business is extremely competitive. You know, you've got Debonairs, you've got Mimo's, and you've got a lot of owned small ones. You know, so it's a very competitive industry. There is potential there. It's very different to famous brands, where famous brands more takeaway. You sit at these restaurants and you actually, you know, you sit and order, you get service and so on. So it's a completely different model to the likes of a Steers. I definitely think there's potential there. Like I mentioned, I do think the middle class are going to embrace that kind of model. Like Chris mentioned, I also, first thing when I heard we were talking about that, I took a graph of famous brands and Spur, and I do think they are being a bit reactive, and I do think they need to make more acquisitions. I do like the fact that they're getting into the lower income bracket, because that's where a lot of the growth is going to come from. From a valuations perspective, they do look a lot cheaper than famous brands, but who knows, maybe famous brands will end up buying Spur.
Do they have the balance sheet? That's an interesting concept. Do they have the balance sheet to make the acquisitions necessary to perhaps beef themselves up to take on the likes of a famous brand?
And again, no pun intended.
I didn't even realize I'd done that. That was a brilliant one.
Businesses like this don't need particularly big balance sheets because, you know, what you're talking about franchising in the main, you know, you don't require an awful lot of cash in the first instance, other than to make the initial acquisition. But from an ongoing perspective, it's not that cash intensive. So, you know, it's not so much the balance sheet they need, it's the opportunities. And you've seen with Taste Holdings, for example, they've been trying desperately to make some meaningful and realistic acquisitions, and they've struggled. And even famous brands now, I think the only one that's really remaining as far as they're concerned is Spur. And would they get away with it in terms of the competition law? I don't know. But I mean, Kevin Hedderwick has stated on more than one occasion that they'd be looking at Spur.
What about the international the international operations and potential to beef up outside of South Africa. Now I can't get away from beef up. Let's see how many of these we can throw in here this evening on our Spur discussion.
Yes, I mean they have tried in the UK and they've struggled. You can see how when you have a look at what Nando's have done there, they've been really successful. So it's a big marketing thing, and again, it's a very competitive industry. There you're going over and you're competing with the McDonald's and the KFC and the Burger Kings and so on. And when Spur has a great history in South Africa. I mean, I think everyone has had at least one birthday at Spur and had the waiters singing happy birthday and so on. So to build a brand like that...
Lots of us have waitressed at Spur as well.
So to build a brand like that is very difficult. I think there's a lot more potential possibly in Africa. I mean, it does have a winning formula. It's a great brand, it's good food and so on. But in terms of international in Europe, I'm not so sure. I wouldn't be so keen on them getting involved.
Would you like to see them expanding aggressively onto the African continent?
I think into the rest of the African continent, yes. I mean, we've heard what KFC, the kind of plans that they've got into Africa. And you look at what Famous Brands are doing as well. I think Africa is wide open for these guys, and I think that they could do exceptionally well.
Coming back to the potential that Famous Brands could take them out, would you buy it as a potential takeover target?
I'll be honest, I prefer to stick with the big brother, Famous Brands. You know, it's like I mentioned, it's an extremely competitive industry. Famous Brands were first mover. They've got hold of all the good brands. You know, they're extremely innovative in that they got all the petrol stations, and now they got the mug and beans at the petrol stations, which I think is really exciting because we don't necessarily have a walking culture in South Africa with coffees and so on. We have more a driving culture. So that's almost going to be like the Starbucks of South Africa, popping into the mug and bean on the way to work. So I really like the Famous Brands management team, and I'd be willing to pay up in terms of valuations to rather buy Famous Brands. And if they get hold of the Spur asset, then, you know, good for them. But I wouldn't be buying Spur.
Hot or not, Mr. Gilmour?
I think warm. I wouldn't say it's hot yet. I mean, having underperformed Famous Brands for so long, I suspect there's a good possibility it might start turning around at some point in time, because I think management has been innovated and energized in that direction. But to be actually hot, no.
What do you do with a warm stock?
You look at it.
You're allowed to cook a little bit longer.
You keep monitoring it closely.
All right, we will go with that one, hot or not, Byron.
You can justify going to Spur every Friday and having market research there. Yeah, I know I would also be borderline. I think there's a lot of potential there and great credit to management. And I do like the franchise business. You know, you've locked in a client for as long as the contract goes, and it really is a winning formula. But I do prefer Famous Brands. But on a valuations perspective, I'm not saying that Spur aren't going to do well.
Hot or not?
I'll go hot then.